What's going on? We're back with another video. This week we're talking about product market fit and whether you have it or whether your cousin has it or whether anybody has it, because we can't seem to get a solid concrete definition that everybody agrees on what product market fit is. We've seen it range from descriptions such as scaling your servers as quickly as you're onboarding new customers, or selling products as quickly as you're producing them, to something like it is a gut feeling that you just intuitively know is there and that you're experiencing in the moment, to even something as benign as, if you turned off all your marketing activities, would you still be growing? And some of these definitions, at least so far, I would say that we do fit into, but some of them not so much. So it's a little harder to tell for someone like us whether we're experiencing the early stages of product market fit or whether we just happen to be capitalizing on a small business opportunity, I guess, by solving a problem. So one of the reasons that we're looking into this, though, is because we had a user sign up a couple weeks ago that brought up a new use for our product that we weren't really thinking about before and actually had never even considered before. And they happen to be in a very interesting space, and so we're taking this very seriously, and we are going to explore it. And so we've been reading about product market fit and trying to get a sense of how we can structure this in a way to where we can make sure we're at least making as intelligent of a decision as we can with regard to how we take our business forward. Because if we happen to go down this path, then a lot of what we're doing today will change. It'll change our target market and our value proposition and the features that we produce down the line as a result of the things that this new target market will care about that maybe our current target market does not. And so we are not taking this lightly. We are being very cautious about how we get involved, and we are going to, I guess, just see how it goes at this point. But we've been reading the articles, again, around product market fit, and wanted to share some of the information that we learned because we think it's helpful as far as how you can look at your business and assessing whether you're, first off, experiencing product market fit, or how you can go about structuring your decision making so that you might increase your chances of at least experiencing it. So the two people that we really read about with regard to this topic is the first is Mark Andreessen, which he is very outspoken about product market fit. In fact, he actually even said that it's the only thing that matters. And he puts above all else market over how good your team is or how good your product is or anything else for that matter. The market is really the determining factor in his eyes. And if you're in a good market and you could have a mediocre team and a mediocre product, the market will pull a product out of your company that satisfies whatever need it needs to be satisfied. And so that's what being in a good market will do for you. However, on the flip side, if you have a great team and a great product and then a crappy market, the market's going to kill you apparently, and you have no shot. And so you will not get product market fit in that sense. And so this is a very vague definition or characterization, I know, of what product market fit is, but that's the takeaway that I got from reading about his perspective on product market fit. On the flip side of that, we have Brian Balfour, who has a 4-part series that we read on product market fit, and he actually doesn't think product market fit is the only thing that matters. He is very explicit about that belief, and almost called out Mark, as a result of his stance against product market fit as being the only factor. So I would say that he actually agrees with Mark more than he's letting on, though, where so the 4 factors that he identifies as being part of product market fit, I would say are just components of product market fit. And once you have all of those 4 areas taken care of, you will actually be experiencing product market fit because, for instance, it's hard to have product market fit if your channel and your product are not aligned, and you would not be experiencing the, holding onto a rocket ship type of descriptions that you hear about product market fit that seem to, characterize that type of event. So what he says about product market fit is, first off, that there isn't product market fit, there's market product fit. And so what that means is much in line with what Mark said, that your market is going to frame the or be the most important factor with regard to how you develop your product. So you have certain assumptions about this market, like who they are, what their problems are, what their motivations for solving these problems are, and you form the product and the feature set and your value proposition in the light of those assumptions about the market. And you test them out, and you might discover certain things and reiterate, what your value prop is or what the features are or even who you're targeting. But the market is really what's going to define the product being viable. And then from there, he has what's called product channel fit. And so that essentially means that you're selling your product through the appropriate channels based on what the product is. So, for instance, you're not trying to sell $1 million Ferrari through a pay-per-click Google ad that takes you to an e-commerce site, because nobody's going to buy a Ferrari on an e-commerce site, at least as far as I would imagine. So you want to make sure that whatever you're selling is aligned with how the route to market that you're using. And then from there, you have the channel model fit. And channel model fit is a spectrum that he lays out, where you have what's average revenue per user and cost of acquisition. And so you want to make sure that your low average revenue per user is aligned with low cost of acquisition. So on one extreme, you have Facebook, who pays almost nothing to acquire users, because it's all a network effect, people sharing content that bring people to the site or inviting friends and so on and so forth. But that's aligned with their business model, because they also don't charge anything. They only make money off of serving advertisements. And so the marginal revenue per user is likely not very high, at least until you start to get a mass audience. And so Facebook's acquisition channels and their average revenue per user are aligned, and so that's good for the model, and that satisfies that one component. On the flip side of that, you have the enterprise sales model, where you have very large dollar deals being done, but they are being done over months of time of negotiation and hand-holding from the client and requirements gathering, things like that. And you have a sales force that's very expensive, that prospects your clients and negotiates the deals and communicates. And so it's a very not bureaucratic, but it's a much more costly system to have, but the payoff as a result is much larger, so it can support that type of sales structure. And so again, you don't want to be selling a $10 product and have that type of go-to-market strategy, because you will destroy yourself. So the channel model fit is the third factor. And then lastly, you have model market fit. And essentially what this means is that you're actually selling a product that there's enough customers to support there being a business. So if you only have 100 customers or potential customers in your market, you better be charging a lot of money for each product that you sell, so that you can actually have a sustainable business as a result. And on the flip side of that, again, if you have a very low price product or low margin product, you better make sure that you have a lot of customers, again, so you can build a sustainable, viable business. And so I thought that article in particular, or that series of articles, was really helpful, because it really frames the perspective of nothing happens in isolation. When you affect one area of the business, such as pricing, it actually might not jive with your channel any longer, or the market that you're going after. And so all of these things need to be taken into consideration together. And once you have all of that laid out and at least seemingly viable plan based on those factors, or those 4 factors fitting together, then you will be at least one step closer to product market fit, or at least be going about it in a much more strategic fashion than just winging it like we've been doing. So we'll let you know on how it goes with this new opportunity that's on our plate, and how we structure these 4 factors with regard to our current situation and thinking and strategy moving forward. And it'll be an interesting ride. So definitely check out those articles. I'll post them in the information section below. But that's it for this week, and I will see you next time.